Javier, how big is this one? How important is it?
Well, it's a big deal for the Permian. It creates, on my numbers, the third largest operator of oil and gas assets in the Permian region. Very skewed towards the Midland side of the Permian. If you think about the Permian, it is really like two areas: the Delaware, which goes into Texas and then into southeast New Mexico, and the Midland area that is more into West Texas. Creates a big company and an amazing growth from Diamondback. It's worth to remember that this company was created only in 2007 with 800 barrels a day of oil production. After the merger, it's going to be producing 800,000 barrels a day.
Javier, I was going through the numbers. Exxon acquiring Pioneer, $60 billion deal. Chevron, Hess, $53 billion. Oxy, Crown Rock, close to $11 billion. What's left? What's left to consolidate?
I think that we can still see more consolidation in the Permian. We have seen the biggest deals, the most obvious ones, some of them family-owned companies that they wanted to cash out, or they have a transition at the head of the families. But I think that there are still too many Permian companies in the kind of range of 250,000 barrels a day that they need to combine among themselves. So I don't think that we are done. I think that we are going to still see big numbers of consolidation, but perhaps the biggest tickets, we have already seen them.
What's the goal behind some of these mergers? Is it just simply economies of scale? Is it that you can get more production if you have some sort of strategic method that goes across a bigger swath of land?
I think that synergies, economy of scale is very important. The Permian has really moved into the phase of mass production of barrels of oil, and there reducing your cost per barrel is very important. And I think it's also creating companies large enough to tick the box of investors that they require companies in the range of $30, $40, $50 billion to invest. And that's what I think, that those companies that they are still sub $25 billion of market capitalization, probably they are going to have to look for merger options to create larger vehicles that can attract the attention of investors.
Javier, when you wake up and you see a deal like this on top of the others John noted, do you think these energy executives considered what they're doing to be, quote, stranded assets, as the Biden administration has called them?
No, I don't think that they see them as stranded assets. I mean, obviously, the sellers think that the buyer is paying a good price, a good return, but I still see demand for oil. We see global oil demand growing. It's going to reach an all-time high in 2024. We are going to hit peak oil demand perhaps in the 2030s, but what we are seeing is so far very, very healthy demand. I mean, we are talking this year in 2024 about 1.2, 1.3 million barrels a day of oil demand. That is exactly on trend. For the last 20 years, oil demand has been growing every year about that number. So we have yet to see the big deceleration of oil demand, let alone a peak in overall oil consumption.
Shale roaring back from when prices hit negative, Javier. What does this message send to the likes of OPEC, like Riyadh and Moscow and Abu Dhabi?
Well, I think that there is a big problem for OPEC because last year, this year, most likely next year, we're going to see a lot of oil production in the Americas. It's not just the Permian or the United States. It's also Canada, it's Guyana, it's Brazil. If you put that all of them together, even if the U.S. slows down a bit, all of those countries are going to be able to add probably around 1 million barrels a day combined, which is more than enough to offset all the oil demand that is growing around the world. So the main problem for OPEC is that the world is not transitioning away from oil. It is transitioning away from OPEC oil into American oil, and that's what is constraining OPEC producers like Saudi Arabia.
Javier, that's such a fantastic point. Does that explain how comfortable we are with the situation in the Middle East, specifically in crude markets at the moment, with prices still pretty low relative to the tension we're seeing play out?
You have told me 20 years ago that we were going to have a big military campaign in the Gaza Strip again, significant attacks by the Houthis into commercial shipping into the Red Sea, resurgent Iran. and oil prices were going to be under $100, I will have not believed it. And here we are. And that goes into how much oil production has grown in America. So let me just finish with a piece of data that was on my column this morning. If you add the United States total petroleum production and Canadian total petroleum production, that's 25% of the world's oil production right now. 1 in 4 barrels of oil today are produced in the United States or Canada. And that really is why the tension in the Middle East is having limited impact in the oil market.